Hey, what's up traders? Node Investor here. Time for an update on the Bitcoin crypto trading video series. I do have a few trades that I want to share with you guys that I have opened up here following last week's little rally in Bitcoin, which at this point hasn't seen a whole lot of follow through just yet. It's still kind of just chopping around, and in quite honestly, in my opinion, the longer this goes sideways to drift lower, the more likely it is to see that big shot down, a little bit of a washout move. And so I'm getting a little bit more cautious here. And so I'll go through some of the trades that I have taken. I did close a couple of them out prematurely, a little bit more of a kind of reducing risk, reducing exposure until we get some more momentum in this market, some more follow through to the upside, especially after the little pullback that we've seen here today in some of the alts. But let's go through some of these here. So first off, looking at Bitcoin, this will kind of help set the tone, and then we'll look at the specific trades that I've entered this couple of weeks here. So we started the month of February just kind of flat after the little bit of drawdown that we saw in January. And as I mentioned, I was just being patient, waiting. Really the level I wanted to see get back above was at 34.80. And then we started to see a pretty good low coming in here last week. And then of course Friday, the big push higher, which at this point hasn't seen a whole lot, just drifting lower, still holding up above this little low that we found at 35.50. So the level that I was looking for was 35.40. That was a 10 EMA on the daily chart at the time. It's still holding. So from a daily perspective, the chart's not looking that bad. But like I said, the longer this just draws out, the more likely we are to see that quick shakeout lower and then a push higher. And in that shakeout, it's a good chance some of my stops will be hit. So I kind of preempted it a little bit, closed out half the position, still have the smaller ones open. I'm going to let them ride at this point. But if we go to the daily chart just to see how that looks, you can see on BTC, we had that very strong volume move off the lows, and we've been drifting lower. We're on day 5 now of this consolidation. The good news is we're still above these key moving averages. The 10 EMA is now crossing over back above the 22 EMA. That's positive. Price is still above, but like I said, it wouldn't take a whole lot to see a quick shakedown. In the event of a shakedown, what I'm looking for is that 35.50, or excuse me, that 34.80 level that was previously resistance to be that new support level, that new floor that Bitcoin price needs to stay above for this longer picture to start turning the trend here, making a higher low on the daily and then pushing higher. So with that said, that's kind of the stance I'm taking. Ultimately, in the next day, literally, I want to see prices push back above this 36.60 level. If they can't do that, it's going to start to look a little bit more negative. I won't be as positive on that move from Friday just because of the longer time this has taken to follow through to the upside. Generally, when it's a strong move, you see some more momentum kick in relatively quickly. It doesn't generally draw out for 5, 6, 7 days before moving higher. And so if we don't see that here in the next day or so, I'm going to get a little bit more cautious, tighten up the stops even more. But just that's really what I want to see going forward here. I want to see some momentum come back in, some volume, the buyers start showing back up, and of course, ultimately, this most recent support hold, but it's getting really close there. Right now, that 35.60 level is pretty much a closing basis support, so a close below that won't look too good there. So let's take a look at some of the trades that I have made. I'll look at the trading log first, and then we'll go to the charts for those specifically. Let me move to the other view here. Here we go. And so on this, real quick, before we go through the details, just so you know, these two right here, ICX and EOS, let me zoom in for us here, those are still open trades. I've put in my stop loss levels here just to walk through the numbers and to get a feel for my total exposure. Right now, if I leave those open the way the stops are, the account has about a 2% risk exposure to it. A little bit less actually now with the other ones closed out, but that's really where it'd be at if everything got stopped out. So at this point, I took 2 shots at Lumens here. I scaled into that one. That's 2 trades there. We'll go through that one. Closed that one out prematurely and then got another shot at it here. Got stopped out. My kind of little rule, I guess, if you will, is if I take 2 stops on a trade back to back, then I just kind of let it go, move on to something else. I don't want to keep trying and trying and trying and trying. You get kind of cut up and death by 1,000 cuts at that point. So I'd been just wait on that one and look for a better setup. I'll show you guys what I was looking at. Essentially, I was just buying in front of support there. hasn't shown any follow through. So moving out of the way, ICX, EOS still open. So of course, right now I'm showing these as losses, but these could certainly continue higher and materialize into some winners. As of yesterday, they were in the green pretty decently, but then they pulled right back here today. So essentially, with current prices, they're both flat right now, kind of break even at this point if I closed them out. And then ETH, I took a big position in ETH, scaled into two buys on this one here. We'll look at the chart there, but I just closed that one out here right before I started recording this, and mostly because of how BTC is looking. So again, that's just basically a wash, small net negative, but essentially just a wash on that trade. It's just closing that out, more of a precaution, reducing risk exposure until we get a little bit more momentum and follow through. I'm okay with letting that one go because that was mostly kind of just a little bit of octane to the account, not a huge percentage gainer that I was looking to the upside, just looking to get some more exposure on the alts as many of them were outperforming Bitcoin. It's still looking pretty good, so I may jump back on that. Just going to depend on what Bitcoin does here today. So let's look at some of the other trades here. So first off, Stellar. And so what I was looking for at Stellar here was a buy in front of this support. I mentioned this, I've tweeted it out a couple of times, this long time support that was coming in, and mostly this was a buy the dip counter trend trade, buy the oversold condition right at this support level. You can see here the RSI was very much hitting these oversold levels, and so I was waiting for that first bounce on the 4-hour time frame. We'll take a look at that here in a minute, and then looking for some confirmation that okay, maybe a near-term low was in, and then that's when I entered. I wasn't just going to blindly buy the next red candle. I was going to look for a little bit of green to start showing up, some buying volume. It looked like we were getting that, and it's still holding up, but hasn't shown any follow through the upside yet. And so what I was looking for here, some potentially decent size returns percentage wise, even on a counter trend rally to some of these Fibonacci levels here. And so that's what I was looking for. And let me see here, this is BTC, so this is when I closed it out. So we did finally get that bounce on the 4-hour view, hit the moving averages, pulled right back, no follow through. There was a lot of volume on that sell, and so I closed that one out prematurely. This is what the BMI index that I used was looking like at the time that I closed it out. We went from a nice green to everything was looking red. ETH was selling off, Bitcoin was selling off, and so there was no reason for me to wait for my stop to be hit. Essentially, I just said get out of the way. And of course, we saw another move higher after that, sucked me back into the trade, and then I got stopped out of that one. So let's go look at that chart specifically. And you can see here on the Binance side here, let me go to my balances, essentially just still holding ICX and EOS on this and just waiting everything out here. If we go to the order history, just before I recorded this, I closed out to that ETH position here. That was the sell, the 1.99 BTC. A couple of canceled orders. These were just canceling the stop limit orders on those. And that's really been it. So it's been Stellar, ICX, EOS, and ETH so far. So it's been a pretty slow month. As many of you guys know, there's been some good ones, and I'll go through some missed trades that I didn't take. And generally, I only take so many at one time just because I don't want to overexpose myself to risk just because of the high correlation in the space. But there was a few missed trades, and there was some that I didn't take that turned out to be good not take trades. But all around, it looked like Friday we were going to start a pretty good little run. I was hoping to see a little more momentum. We certainly could by the time I'm done recording this, but at this point we haven't seen a lot of follow through, and so I'm taking a little bit more of a cautious approach and gonna wait on getting a little bit too aggressive until we see some more upside momentum, because I know that if we do start to see some upside, there's gonna be plenty of other new setups to have, and I'm watching a few others right now as it is. So I'm not worried about missing trades so much as I am more concerned with managing risk at this point. So let's go to Stellar real quick. Let's kind of walk through some of this thought process, what I was looking for here. This was the drop here. This blue line was what I was wanting to see hold. It looked like it was holding. And so essentially what I did is, if I zoom in here, this is the 4-hour view. I put in a conditional buy here for my first half order. Wanted to get filled on that. We had that little reversal, started to see some pop, and then of course we saw some pretty good action coming in here, and it looked for a minute there like it was gonna work. We had I got filled on that, and then the next candle started to push higher. At that point I was up about 3% on the trade, so not bad. My stop essentially was the low point here, the swing low of that. That was my logical place in the chart that said if it breaks below this, then clearly I was wrong on my assessment, the reason for entering the trades. I would get out of the way there. So made for a relatively tight stop compared to the potential upside on this. And then we saw this big reversal, and then over the next day or so, prices started to pull back in. Bitcoin, ETH, they weren't looking good. We hadn't seen that big Friday rally yet. And so I got out of the way, closed that out. And then the next day, a pretty good run again, jumped in here as it started to push higher. Again, looked like it was going to work. Was feeling pretty good about that trade. And then, of course, we saw what happened next. Pulled all the way right back down. Got stopped out with a 5% loss on that one. And so after two of those, I said, I'm good for now. I'm going to step aside. And then, of course, a few days later, did it again. I saw that big rally. I said, okay, got wicked out. It's going to go. No big deal. I'm just going to let it go. I've had my two shots at it. I'm going to wait for this one. And then, of course, it's fizzled out again. So nothing to do yet. You get those shots, but, you know, they chop you in and out. After a while, you just got to step aside and wait. What I'd like to see, if I want to get back in this one later, is I want to see prices push higher now, get above this little resistance zone, and then consolidate here at these highs, put in maybe a ascending triangle base or some sort of range here, and then I'd take it on a breakout at that point instead of getting sucked back in. So that's just my take on this one. And for now, nothing to do. Looking at the next one here, ICX was the next trade that I took. And this one has been very choppy here as of late. So this one was one of the first movers. This actually had a very strong move before Bitcoin began to rally, and just proceeded to consolidate here for several days. And so my entry on this guy was right here on this candle. I was looking for this pullback. Initially, I wanted to re-enter on a retest of the breakout points. I had a buy order at 580. And the bottom of this wick, maybe hard to see on the screen there, the bottom of that wick is 585. And then it quickly pushed back up. The next couple of candles pulled lower. And so I started looking at this saying, okay, that may have been it. If I start to see this price action resume, I'll get back in. We saw the first green candle here. I was waiting for some confirmation. Next candle above that started pushing higher. And so I jumped in here. My buy point was 610 on ICX. And so pretty good little entry there. My stop, of course, was relatively tight, just below this wick here, around that 580. My initial buy point that I wanted again was now my stop. So it gave me about a 5% stop loss. And then it pulled right back in, but it sat tight. And then here yesterday, we started seeing this one move higher, or 2 days ago, mind you. It started pushing higher. At one point, the trade was up around 6% to the upside. And then here today, we're starting to see a pretty good little pullback here. A lot of, not a lot, but higher volume came in relative to the recent candles on this pullback. And so now it's not looking so good. I'm not liking it as much because the basis for buying this was this bull flag type of pattern. You want to see some follow through the upside and then a push higher. And I was looking for a push above that 570 level. And then my target on the upside was this resistance level. 720 to 740 was really the level I was looking at. That's based on the daily chart. If we zoom out, you can see there's these wicks here at the upper end around 710 and up to around 740. So that window there was really where I was looking to scale out. And of course, would have certainly moved the stop up or taking some profits off at around 670 when it crossed above this prior high. But we haven't seen that yet. So not sure what I'm going to do with this one just yet. I still have my stop loss in place there for that 580. But most likely what I'll end up doing is either just closing this one out flat here. It's at 611 right now, so it basically would be a wash, or pushing my stop very tight. And let me zoom in here, and just letting it run from this point, but with a very tight stop. So I'd be probably pushing that stop to the low of this candle here that had that high volume wick. And the low there is basically 600, that's 599. And so I may just push my stop up to that point. If it breaks below that, I'll just get out of the way and let this one set up. If I do get stopped out on this one, I'm certainly going to keep an eye on it just because the daily chart is still looking good. It was a first mover. I always make note of that. The volume starts coming in. But at that point, the way I would approach it is probably more of a breakout trade, just because it's been in this choppy range here. And so I'd be looking at this range right here, and let's assume that that is the low, 580, 585 or something. Then I'd be watching this range, and I'd probably look to take it if it starts to get above and hold above that 640 level, and then I'd look for a smaller trade percentage-wise up to that next level, with my stop being just below these swing lows here. So if I get stopped out, that's the plan, or if I decide to go flat on this one, that'll be the way I'll keep it in mind as far as a potential next trade setup. But for now, it's basically flat, kind of at a wash on this one, so nothing to do yet. But I don't like the way it just pulled right back, found resistance right at the prior highs here that it had during that first big run up. So that is now a clear level to be watching of resistance on the way up. So that's 640 on ICX. EOS. So looking at EOS BTC here, this one has been a strong one. I missed that initial breakout here. This is when Bitcoin had that strong move. EOS was actually pushing higher first, and then it started to get pretty choppy here. And I had a dip buy order for a pullback at 7,200 right there, and I missed it. So I had a dip buy order. I had two areas that I wanted to take. I didn't want to take the first little bull flag here. It pushed higher above the prior highs, but I didn't want to jump on it there just because it was a little bit extended. And so I thought I'll be patient, I'll wait for a pullback, or I'll give it some time, let it consolidate. It pulled back, didn't quite hit that 7,200, held above the 22 EMA. The low on that wick was 7,270, and so 7,300 would have been a better buy point on this guy, would have been filled. So I missed that buy entry, but I saw it bouncing back, and so I started keeping an eye on it here. At this point, it had consolidated enough. The moving averages were catching up, and so it was back on the radar. I saw this first green candle, and then when it started to push higher, it looked like it was about to start making some new relative highs. So I jumped on this one, pulled back, still holding above the 10 EMA, so I wasn't too concerned. It's just started marching higher, so it's still looking pretty good. Got a little extended yesterday. If you look at the RSI here on this guy, the RSI was pushing that 75, and there was also a bearish divergence starting to show up here, so you can see RSI pulling back here. So it looked like it was due for a pause, a little bit of a consolidation here at least, and we did finally see that pullback here today. Still holding above the moving average pair, still in the green a little bit on this trade, not a lot, but this one is looking pretty strong, has some good levels to run to next if it continues higher. And so the next level up from here would be around that 8,600 is what I'm watching, up to around 8,800. And so you're looking at about another 8 to 10%, maybe 12% if it can get some momentum. Of course, that's going to all depend on Bitcoin. You're going to see how Bitcoin does here in the next couple of days. So I'm keeping this one here, but generally I'm not going to let my stop be the low of this swing anymore. I'm going to certainly raise the stop up here to around right there. That'll give me about 2.5% or so on the stop. If it breaks below that, then good chance we'll see a little bit deeper pullback, maybe back to that 7,300 again. I may reassess it at that point, but for now, I'm gonna let it go. This is all of these I'm treating more as swing trades. I'm not looking to scalp these little quick moves on the 1 hour chart, but I'm trying to give them a little bit more room to breathe, and I'm position sizing accordingly so that at the end of the day, whether it's a 5% stop loss, a 10%, or a 1%, the overall total risk to the account is going to be the same amount because of my position sizing. And so if we go to the trade sheet on that one, that was Lumens, the second one, again stopped out of that trade. ICX, this was ICX, again one of the first movers. We just went through that one here. So looking at EOS, this was EOS, 7,700, 7,250 right now, 8,800 first target, 9,400 second. It's about a little over 2 to 1 ratio here, but again, I'll be moving the stop loss on that one here higher. So that 7,300 that I have on the log, certainly that won't be the level to be watching. It'll be a little bit smaller, so instead of a 5.5% stop, I'm going to tighten that up a little bit, just in light of the overall markets and the fact that some of these have pulled back already. I'll be looking to tighten up things just a little bit here and reduce the overall risk exposure. In this market, you got to remember, we're still very much in a bear market. So the big picture, the broader trend, the macro view, we're not in a strong uptrending market. So it's good to take a little bit more of a cautionary approach. Keep getting these alerts going off. It's okay to take a little bit more of a cautionary approach. You know, so the way I'm taking it right now, to me, risk management, capital preservation is more important. So when in doubt, I'm going to step aside, get out of the way, and it's always okay to get back in if things start looking strong again, looking for more setups. But right now, we're just not seeing that just yet. So just keep that in mind. If we go back to the BTC picture, the overall view, and go to the daily chart and even the weekly chart, it's important to remember we're still very much in this broader downtrend. So we haven't cleared any major resistance levels just yet. We've not broken out of this pattern of lower highs just yet. We do have a good chance that we're making a higher low, but of course there's always that, hey, this is just a big bear pennant on the weekly view and we're going to break lower. So that's always a possibility, and we got to keep that in mind. This is bear market trading technically, and so until we finally start turning the corner and showing a little bit more continued strength and momentum, going to be cautious. What I was looking for, and many of you that caught the live stream on Friday, I was looking for this. I was looking for some follow through, a little bit of a pause on the shorter time frames, and then some more momentum to the upside. We've not seen that. In fact, we've seen a very drawn out consolidation, longer even than we saw back here when prices pushed up into that 4K level and sat there for 3 or 4 days before having that big break lower. So we're already longer than that time frame. So just something to note. We'll probably see the next bigger move here in the next day or so. Right now, I'm not going to be surprised if we see that move to the downside and a little bit of shakeout first. If we get to the upside, great. But for now, I'm not going to be surprised. And in fact, I'm expecting a little bit of more selling pressure to show up just because we haven't seen the bulls show up as quickly as one would have hoped. So just keep that in mind. Going to remain patient, keep things tight. You got to remember the name of the game here is capital preservation. Always use stops. You got to live to fight another day. Opportunities are like buses, right? There's another one always coming. So, I'm more inclined to buy the dips and wait a little bit more for stronger setups than FOMO and chase some of these trades, because a lot of them just haven't really been working out in terms of across the board upside momentum. So a few trades that I am keeping an eye on that I'd like, that I want to see follow through to the upside if the market can get going. IOTA was another one. Obviously we talked ICX. Looking at IOTA was on the radar here. It looked like it wanted to get going. Hasn't followed through just yet. So it's just kind of coiling up here. This level around that 78.40, 78.50. That's the level I was watching. We saw this pullback. Looks like a pretty good pullback entry. Started to push higher. And so if I wanted to trade this now, the way I would do it, and I'm not recommending that I'm going to do that or that anybody do it this way, but if I wanted to trade this, the way I would look for it is using this most recent swing low as your stop point. So just a little bit below that. At most, this yellow line here, which was recent support, we had that false break lower and then the push higher. And so I'd be using something like that as my stop level. First target, it's got to get above this resistance. That'll put you, 2-1 ratio here would be right around 77.30. And then above that, it's got room to run. And so this is a pretty good potential with a relatively small risk. You can see here, this trade setup would be about a 2% stop loss risk at this entry point, with either about a 5% run to a 10% run if we can get up to these next levels. And that gives you about a 5-to-1 risk reward ratio. So that's really good. My minimum is 2-1. So what that would mean is if I took this trade, I would position size it bigger to account for that 2% risk. And so what I mean by that, if I go to my size calculator here, some of you guys have access to this. If not, check out the link in the description. I'll post a link to this file for those of you that want this template. But with a 2% risk, I can buy 1.25 BTC on a 5 BTC account, assuming I'm operating out of this first risk tier column, which I am right now because I'm playing it a little bit tighter. So the most I would risk is 0.5% of the total account, or 0.03 BTC if it stopped out. And so with a 2% risk, I can size that at about 1.25 BTC. As you guys have seen, most of my trades generally are in this window here. I'll take a 4, 5, 6% risk, which means my position size has been around that 0.4, 0.5, sometimes 0.6 or 7, but it's generally in this little window here based on the volatility and the average true range of the specific trades that I'm taking. But with those really smaller risks, slower moving ones, you can position size much bigger and it'll account for the smaller upside percentage, but overall the account will still benefit because of the larger position size. And so IOTA is one on the radar, but I want to see that one show some more follow through. Dash, it's one I missed, and I was watching this on the shorter time frame. This broke the downtrend. It looked like it was putting in a nice double bottom, and I looked at it right here, looked like it was breaking out, pulled right back to that breakout line here, and then it just took off. And unfortunately, I was already in a couple of other trades. I've been trying to limit the total number of trades I'll take in a day or a couple of day period, just so I don't overtrade in this market that's not really conducive to a lot of momentum. So I'm going slower, but certainly I missed this one here. This would have been a nice trade, up about 15% at the peak here before it's pausing. So it's still on the radar. I still think it's good. They've got some good catalysts going. Next upside target right now is around that 2400 level or so, and then above that 2600 levels. So could keep going. So it's definitely one I'm going to keep on the radar. I'd like to see a little bit of a consolidation here, digest some of that move, and then maybe we'll get a second leg up on this one. Another one I was liking was NEO, and again, this was a little bit of a breakout trade here. Looking at that would have been my buy point maximum stop here. At this point, if I was in this trade, I'd be pushing the stop up, tightening that up for sure. But it's still going, kind of edging up slowly. Next test on this one is around that 2400 level. That's the top of this wick right here, and then the target on that trade, it would be about that 2580, in and around there is what I'd be targeting, maybe 2650 on the upside. But that'd be a pretty decent trade here, about a 21% gainer had I entered on this breakout. Again, this was another one where just limiting the total number of trades. Pick your poison, as they say, unless I really want a position size smaller and then take on more trades. But at this point, I don't want to do that, just because I don't want to have to manage 5 or 6 different open trades at one time. But this one had that big wick here, pulled back, found a little bit of support, but it's slowly marching higher right now. So definitely want to keep an eye on. It is pausing right now with the rest of the market, but NEO has been stronger, has NeoCon going right now. So there's that kind of driving things. But all around, showing some pretty good volume patterns. So I'm liking the way that one's looking. Another one was Cardano. So looking at Cardano BTC, this one has been stair-stepping its way higher. A little bit of consolidation finally, but was making some higher lows. You can see that trend is still there, but it's starting to test it now. So see if it can bounce off of this trend line. If we go to the daily chart, this one's looking pretty good. What I like about this one is it had that big rally here in early January that peaked here before finally pausing, and it pulled right back to the 618 Fibonacci retracement level on that daily chart. Found some support there and has since been moving higher, bouncing right now, pulling right back to these daily moving averages. And so I'm keeping an eye on it here. It looks like it could be a good pullback entry in and around these levels. And of course, if it can follow through the upside, then it's got a pretty decent run to the next level around that 1200 to 1240 level would be my next target on the upside. So this is definitely on the radar if this market can get going. I'm watching this one right now on this 4-hour chart for a potential bounce from this support level. If it gets below that 1125 level and starts to close below that, that's going to negate this, just because at that point it'll start looking like lower highs and lower lows. If it breaks below that low, it starts to make a new lower low. So at that point the pattern will have changed and it won't look quite as strong as it looks now. So there's still some good setups, plenty of smaller cap names moving and setting up, but until we see the broader markets, the big caps continue to show upside versus Bitcoin, then I'm going to remain cautious. But it's all going to come down to what Bitcoin does. I still like ETH, as I mentioned at the start. I closed this one out prematurely. I was on this trade, but had that nice breakout, couldn't hold it yesterday, pulled right back below this prior resistance, and trading there now. Still holding the moving averages, still above this breakout point right here, and so not looking too bad. Volume is positive here. You got the lower volume here on this pullback, so definitely one I'm still liking, still watching. But if we go to the daily chart, I mean, the 10 EMA is still way down here below that breakout point on the 4-hour chart, and I don't like the way this current daily candle is shaping up, and so it would not surprise me to see a little bit more pullback action before we get some more follow through to the upside, which is why I closed it out prematurely. And I just basically was a wash on that trade and that was because I had a 2 BTC size position on that, pretty big. It's about 40% of the total account, and so I was keeping a tight stop on it. And when I saw it pull back here today, decided get out of the way, let the market prove itself to the upside. So that's going to be it for today, my friends. I know it was not a whole lot here, but I wanted to go through some of those trades and really just kind of share my thought process. And really, the more I think about it with this market, until we see some more upside, I'm going to just close out to that ICX trade, call it a wash, close it out at that 611 that it's trading at right now, and get out of the way and wait for this market to just shape up. So overall, a relatively slow February compared to some of our recent months. Seasonally, February into February, March, April has shown some pretty good action in the crypto space, and so it's going to be interesting to see if we get some of that here in the coming weeks. But as I always like to say, keep an eye on the big picture, because ultimately that's what really matters, the macro trend, the daily trend. If you're flowing with the trend, if you're trading in the direction of the trend, it's always the best trading that way. And so if this daily chart starts to look more positive and the price action starts to push higher, then the wait will be worth it. Being patient, waiting, preserving your capital will be worth it, because at that point there'll be plenty of good trades to be had. We'll have plenty of those very strong double-digit percentage moves to the upside. And so just got to be waiting, got to be patient, and taking what the market gives us at this point. So for now, it's signaling caution, yellow light, and so until that changes, that's the stance I'm going to take. So I will be posting a video shortly with top books for traders. Some of you guys have asked about more books, specific strategies, different type of things that you guys want to learn about. And so I'm going to compile a list of those books that I would recommend, books that I've read. And there are really just countless of good books out there. I mean, there's a lot of really good ones that you can take a lot of gems from, but I'll narrow it down to a few of my favorites and some topics that they cover. And so look out for that. And also, one last note, remember that the new video course is out covering trading psychology, risk management, trading strategies, and a bunch of trading indicators. There's a course overview video posted here, nodeinvestor.com/training, and I am running a promotion through the month of February. You can get 30% off. Check out my Twitter feed. It's got the promo code in there. So go check that out. That's what I do during these slow periods. I learn, I study, post out some new content here. So I would recommend take advantage of the slower trading period if you're generally an active trader, and use this for some good learning, use this for kind of brushing up on strategies, on indicators, getting better at perhaps documenting your trading style and risk management and all that good stuff. So thanks for watching, guys. I hope this helped. Please feel free to leave a comment, ask some questions here, and I will see you all in the next one. Take care, everyone.